And I want to thank everybody for being here tonight. I know you've got lots of other places you could be, but we're kicking off earnings season hot and heavy starting tomorrow. So this is the time of the year that, 4 times a year, that I like the most. All right, let's get going here. Well, we'll start with the disclaimer. Trading involves risk of loss of capital, and you should, you know, think that everything here is for educational purposes only and not to be construed as a recommendation to buy or sell any security. And a little bit about my own background here, and you can read that. I've got master's degrees in both computers and business. I've been an active trader since 1998. I've been a full-time trader since 2009. Can't believe it's been that long. I'm a technical trader and use limited fundamentals to add on to that. Things like the AMD trade that I did. I moderate for the H&R candlesticks from time to time as needed, and I do provide one-on-one mentoring and coaching. And you can go on to hitandruncandlesticks.com and find out about that. And there are basically 3 different segments. Hit and run candlesticks, the main section where they talk about primarily the setups of individual stocks. Right way options on the far right hand side, primarily focusing on options, but they will do the occasional stock trade. And that doesn't mean that the stock trades mentioned in H&R could not use options, because in fact Rick does directional trades by and large. And the LTA scanner, don't want to leave it out as the third and final piece. It helps, it's probably one of the best programs I've got out there, best value that I've found for doing real-time scanning. If you're wanting to do very short-term trading, that's the way to go, most definitely. And even if you're not doing that, it'll help you get in early. And stand by for a special offer at the end of the presentation. We'll go over and get you a discount to get it started. All right, the agenda. Go over the economic calendar and earnings calendar. A little bit of a market overview. Find out where we are, where we might be going. Going to provide some trade ideas, both short and long. A little more difficult to find the shorts there because they aren't the greatest of setups, but we'll see. Whoops. We're going to do in the first Q&A about non-stock specific, meaning when I finish and I ask for any questions and answers, the first section, I'm looking for people who are asking something about maybe things they saw on my chart, clarification about something I said, that kind of thing. Then I'll put up a bunch of crosses, and I'll ask you to look at your stocks, time permitting, one at a time. And please let me know whether you're already long, already short, or looking to go long or short. That'll help quite a bit. All right, economic reports, nothing on Monday. Well, wait a minute. We do have the Empire State Manufacturing Survey. I blew that one there. I apologize. We do have Tuesday retail sales and import-export prices. The retailers have been rallying a bit lately, probably based upon jobs numbers. And so if this retail sales number is disappointing in any way, shape, or form, we could get a little bit of a sell-off, especially in that industry and sector. Industrial production, business inventories, and housing market index, all again on Tuesday. On Wednesday, we got housing starts and then the weekly petroleum status report. On Thursday, weekly jobless claims and Philly Fed. And on Friday, we've got consumer sentiment. All those are potentially market moving. Here is the earnings calendar for the coming week. As I said, we're starting to kick off on Monday/Tuesday. We've got the financials usually lead us off. Citigroup, Goldman Sachs, JP Morgan, Wells Fargo. And we get the Bank of America on Wednesday. We've got CSX. The ones in yellow have greater than 10% short interest. No, I don't. I figured that everybody could get those. I basically showed them how to do it, but I don't. I haven't sent those out in quite some time, Chris. You're the first one that's asked me that by either email or what. Yeah. Oh, you're welcome. Right now, my mother has been going through a series. She had an operation, a series of trips back in and out of the hospital and rehab. So I've been just a little bit on the busy side there. We got BB&T. Let's see what else coming up here. Honeywell on Thursday. IBM, KMI, Morgan Stanley, United Health, Union Pacific, United Rentals, Thursday, Friday American Excuse, Cleveland Cliffs over 10% short interest. Watch for a possible short covering rally. Capital One, E-Trade, Kansas City Southern, Micro Squish, Skechers, one of the ones I'm looking at, and Skyworks, SWKS. All right, so let's go. Let's go look at the market. And let me bring up. Here we are. Let's go look at the oil futures. We've been in a bit of a rally since the early to mid-June dip, double bottom. Last week, I said that we could be doing a curl up and we'd watch for a move to 59.5 to 60. We didn't make that move up there. Looks like we're doing kind of a bullish pullback here on the last 2 days. All depends. I think anything over, well, let's make this one a little higher. $58.90 to $59. Let's make that 59. We do have a little bit of concern about the Iranians in the Gulf of Hormuz and oil. Yeah, Robert, that's cool. The one thing that I do in my earnings list is I filter out stocks that by volume, so they have to have 480 or so thousand shares average per day over the last month, and also an average to range, so that they're not stocks that don't move and no low price stocks. But however you want to do it, that's fantastic. I have shown how I do that over time, and if people want to know, just ask, and I'll make a 2 to 3 minute tutorial at the end of this presentation if you want. Show you how to do it. Very, very simple. I can do it, and except during the height of earnings season, it would only take less than 5 minutes. Okay, crude oil, we're looking pretty good. Gold, we got our rally up to 1400. We've established a new trading range from about 1385 to about 1430, somewhere in that ballpark. So if we break out above that, we could start to get a rally. Probably 1450 is the next high up there that I remember. Anyway, S&P. A lot of people have been saying, "Oh, we're up here near the highs. We pulled back," and people got concerned. Then we broke out and said, "Oh, this is gonna be fake out, breakout." Well, follow price, follow the moving averages, follow the trend. The trend was kind of getting pushed down just a little bit at the end of June, but the pullback last week was actually a bullish pullback and followed by the move back up. So the news drove a lot of this, but there are people out there that absolutely know what's going on. Do I say that there's inside information being passed along? You betcha. All we need to do is follow the money. The money trail will tell us which way is most likely going to be going. Dow, again at all-time highs on Friday, along with the S&P over 3,000. NASDAQ, and we hit all-time highs here on Friday as well. Russell, this has been the weak sister. She has not participated in the rally very much at all. If we do a pullback or maybe even go into a short-term downtrend, what I'll be looking at from an index point of view is the Russell or IWM, and looking for possible quick shorts on those. However, we are still in an uptrend, albeit quite weak. So I have, in fact, you'll find I have probably twice as many longs as I do shorts. Usually I can find, about a 50-50 mix of stuff that looks good on either side of the trade. In this case today, not so different, not so easy. The VIX, we're still hanging down now around 12. The old, 12 to 11 to 10 is now the new norm is 11 to 13, maybe 14, 15. But it wouldn't take much for us to get a spike up. I won't go over the ETFs. What we're going to do is we're going to jump right back in to our slides and a little bit of trade ideas. Let me bring that over. And the longs in alphabetical order, it looks like. I've got AMD here. AMD, when it did the jump up and down in here, I traded from down here around, I want to say 20. I traded from back over here and below 30. Took some off before they did their announcements. And I sold a bit early, and I did not get back in. I'm not sure. This does look like overall let's look here. This kind of looks like a cup and handle. We break above 34. This one could go higher. Fundamentally, they announced some new chips that are being extremely well received in the tech community. Their graphics cards are trying to play catch up with NVIDIA and giving them a run for their money. That was their fundamental perspective. Deere, I'm going to show you a 3-day chart here. That was a 2-hour, sorry. Whoop. Come on. Daily. There's a daily. And there's the AMD cup and handle. Deere, cup, handle, could we be moving back up here? Most definitely. The balance of power has been showing ever since about the middle of June, showing buying power to the positive side. Watch for a possible breakout above 168.5. FLR, I'm looking for a move to 34.25. With positive trading, I'm probably initiate or long. Looking for taking off money around 43.25 or so is the as a rough area is target 1, and then see if we could get in that gap, and then other targets would be as high as 41.25 or so. IMMU, looking for a move up above say $14.75 to $15, move to 16. And that's where kind of the first target would be. This is rounded about a breakout. Normally what we do is get a move above the 50, pull back to at or below the 50, and then move back up. The targets are somewhere looking at where the 200 is, or the decreasing, in this case 200. I think that's going to be somewhere around 1685, but I'm seeing potentially some resistance here around 16. Marathon Petroleum, I was ready to jump into this about a week ago. I didn't do that, and then I kind of got so busy I couldn't jump in here, move over 55. It's not going absolutely gangbusters unless oil takes off. It's probably going to go up here and retest this high volume spike here to high around 57 plus. And I think eventually we're going to go into 57, 78, 75, something like that. Oxy makes my list. First move to 53.75. And then it becomes around the bottom breakout. Those who want to wait for confirmation here that it actually does break the downtrend, wait for a move up 53.75 and a comeback, and hold above 53.75 and prove that that is support level, and then we could go anywhere up towards the 60 to 62 area. Restoration Hardware was a darling 2017, 2018. This year has not been such a great year. Maybe expectations were a little too high. We did get a gap up. Recently we don't have earnings until we get up to September the 3rd. I would think we'd go up to this 131 area from 122. We had some good balance of power buying here over the last couple of weeks, 3 weeks. So a move above, say 123.50 could trigger a long. Skechers, I went wrong 32.75 last week. I had pointed that out, I think, in last week's session, and my target's here at 35 and a quarter. I would not be surprised at this $34 that we wobble a little bit and maybe do a pullback. So those that are not in, wait for a possible pullback and establishing a bottom, and then you could go long with the stop slightly under that. Stamps, a break over 48.50 will get me in the gap, and we've got a heck of a long ways to go to the upside there. Will it make it all in one move? No. I use, as a rough idea, the 100 period moving average gives me a good idea. A lot of hedge funds, I spoke with some hedge fund managers when my son was going to school up in the Northeast, and they like the 100. They like it better than the 50. So I'll watch and see what happens if it hits the 50. Maybe take some money off the table. Target's kind of in the trading range. We get above 89 and a quarter, we could go long. If it goes below the 85 and a quarter, I look for it to drop, in 82 or so or lower, maybe even to the rising 50. UAA, Under Armour has been kind of an underperformer for quite some time, but since January, it's doing quite well, and it does have 10% of the float still short. They have not been able to, there's not been a whole lot of covering. We are in this gap. This 28 and a quarter is the lowest part of the gap here. So anywhere between 28 quarter and 29 could be targets there. Probably want to see that it does some sort of consolidation around this 27 and a quarter area so that you can establish yourself a good stop level. And last one on the longs is XPO Logistics. However, I will not be going long unless we get above the $60 level. I will make it prove, and I might wait till it comes up there and comes back and proves that 60 is going to hold. Well, let's go on over to the shorts. Only have 4. Abbott. Now, this is against the trend. The trend is still up, although it's really, look at the EMAs. It looks like it's curling over here. This is the 8 and the 17. If I show you the 3, the 3's punching through the 8. I think it pulls back to 82.15. Is that tradable? I don't know. You'll have to make the call. Can it continue to go lower than that? Absolutely. But also don't be surprised that if it kicks in and goes back to the upside. Celgene. Celgene gap down after doing a run up, I think in 725 earnings. So probably not. Maybe some sort of FDA announcement or something like that. I don't exactly remember the news. But we're in this gap back here from late March. Going down to the $89.50 to $90 level is probably quite likely. It'd be nice if we did a wobble here and did a little bit of an intraday bounce and then went down. That way we could establish a tighter stop. Johnson & Johnson had a horrible day on Friday. A lot of the other healthcare providers and drug makers were doing reasonably well, especially since the news was that they weren't going to pursue the elimination of rebates for drugs and for healthcare companies. So I'm a bit surprised. This was very, very weak. I'm looking for a move down to 131 or lower. And again, Novartis, the same similar situation, moved to 85.5. All right, let's see what we got here. All right, I said that we would, we have a 60-day, it says RW30, but in fact it's a 60-day offer. They've extended it to 60 days. $49 each for either hit run candlesticks or right way options. Can't beat that with a stick, to be honest with you. Give them a try. You'll I think you'll like it. And now we're at the general questions, not stock specific. Do you have any general? Well, that's kind of stock specific there, Reggie. Let's see what we got here, though. XBI got down to $85 again. I don't necessarily call this a hammer, although I guess it could be on its own. But what I normally like to see is I like to see a series of lower lows and then followed by something like that. That's what I'd like to see. Robert, I use the 3, 8, and 17 exponential moving averages, the 50 and the 200. I don't use the 50 and 200 other than to monitor, the 50, 200, and 100 to monitor where they are, because I know a lot of people, institutions use those. To be honest with you, if the stock comes up to the 50 or the 200 or even the 100, all they're going to do is wobble and pause. If they're wanting to go through it, they'll go through it like a hot knife through butter. So I just want to know where they are. I don't use them to trade anything. I don't believe in the golden cross or anything like that, although if you get a golden cross and people start to jump in, you'll see other signs as well. Now, what I do use under my EMAs, the 8 and the 17 together, I'm just plotting those when I took away price. You can see whether you're in an uptrend or not. So back here, when we got from January through April, XBI was in an uptrend. From April to June, it was in a downtrend. Let's go back here to the daily. There's January to March and a little bit of April. We kind of wobbled here. We're just kind of running out of steam, and that's what it was showing me. We did have the 8 cross down below the 17 and continue down until June, and then we did the curl back up. I do know that there's some people that use the 8 and the 17 crossing, not necessarily as a trigger, but to help find candidates. So if you find the 8 above the 17 or doing the cross fairly recently, you'll see how it has moved back up to an uptrend. So we're dragging here in the middle of June, and then funny you should see that it did a move up, pull back, and there's where we get our changeover, middle of June, and where we got the trend down was in mid-April to June. So you can use those. I like to use those because those are longer term, but they're short enough to do swing trades. And I prefer those. YS wants to know, could you please go over your scanning criteria, how stocks make it to your watch list? The first thing they're going to have to do is they're going to have a minimum of around 500,000 shares. Now, I use scanning about 485,000 because I don't want one to be right at 489,500 and then I don't look at it. Well, it's approximately 500K. Now, if I'm going to day trade it, I want it to be as close to a million as possible, and I'm probably going to look at 875 to 900,000 as an average over 20 days. 20 trading days is approximately 1 month. So I just want stuff that's in the last month, trading well, and I don't want to go into stocks below 5. I'll definitely eliminate every one of those. What I normally like to get is a sweet spot from about 20 to 100. And what I do is I have a list here. I have high option volume off the CBOE. The CBOE publishes Monday high option volume every monthly. The volume leaders in options over the previous month, and I pulled out about 472. Doug uses say the top 300 or so. I look at something around 10,000 contracts per month or more. Anything above that will probably make it on my list. And then I look at average daily volume. You're never going to see, DWDP shows 0. DWDP, it must have gotten bought out or something. But you're not normally going to see stocks like CCE or LE making this list. And there are probably people doing Rob, I'm gonna repost JJ. Could you hold that until we get to the specific stocks and put that in as well? Thanks. Okay, so I'm looking for average daily volume that's up there. A lot of these could actually go down, but something like Northrop Grumman, because it's a $300 stock, 600,000 shares is quite a bit in dollars. Stamp, $48. Let's see, look at the price here. You probably aren't going to see price very low either. $5 or higher. Nokia has a lot of volume on the options. I'm not really all that interested in. So what I do when I'm looking for J-hook scans, whoops, let me edit here, I'll show you. I'm looking for the 8 exponential be above the 20 simple, the 8 exponential above the 34 above the 50. So these two together get me in an uptrend over the longer term. And let's go to overstock. So here we got the uptrend, and then what I'm looking for is 2 days of lower highs, usually looking for the pullback, and I want it to be up today. And there's the volume, 485, looking for 500 minimum, and looking for a price between 5 and 200, and the average to range for the last 14 days to be 25 cents or more. I don't want stocks that only move 1 or 2 cents. Stocks that don't move don't make me any money. All right, so that's pretty much the criteria that it has to meet. There's a bunch of them, and I can do trade-offs. If I don't get very many or any candidates that meet all of my criteria, I may start manipulating my criteria and back it off just a smidgen on one or two of them, and it does depend on what the markets are doing. So the SPX is in a move up like this. I would not expect to see very many good shorts in a market that's this strong over the last month and a half. I could see some, but I won't necessarily see a lot of good ones. I would expect to see more longs than shorts that fit my criteria and that I'd be interested in an uptrend. Conversely, back here, when we were in a solid downtrend, we were finding a lot more short candidates. Stocks that would go down, revert to the mean, meaning the moving averages, or do a bounce, and then fail on the bounce. Okay. Do I use trailing stops? Yes, I do. I set my stops. I'm in here. I'm sitting in front of my computer almost the entire day, monitoring my setups. When I'm not there, I will set in a safety stop, but I'll set in targets and stops so that it automatically executes when I'm not here, if it meets my criteria. Joseph Kelly wants to know, are there specific candlestick patterns that I use for intraday or daily setups? Absolutely. My number one favorite is the J hook, where you get a move up, pull back, and then move back up. You got to move up back here and then pull back, and then pull back right to a support level at 2880, and that told us that we were probably going up to the next step level. We got above that, pull back, pulling people into the shorts and sucking them in, and then ripping their lips off with the rally. An intraday basis, you're going to probably see the pullback here. We're going to go to the 60-minute. You see how got to move up, pull back. Generalized move up, pull back. Where do we pull back to? We pull back really to that support level. We could not get over it the first time and pull back to the support level. Dip below it to get people short, and then ripped them apart. We jumped up, went sideways, and then kept moving solidly up on Friday. I love to see the J hook or a flag pattern. A move up followed by some sort of sideward motion, and then a move up again. And where I differ from people, I think Stephen Bigelow out there is the one that introduced me to the J hook, but I've modified it a little bit. Whereas he says it's not a J hook until it passes the prior swing high. I say it's a J hook when it does the pull back, bottom out, and move back up. Because I want to get long here with a stop really tight here, so that if I'm wrong, I know it right away. I don't want to go long up here and have a stop way down there. In fact, I use that swing point right in here as my first target. And if I only go up to that level and I take money off the table, it has to go all the way back to my entry point before I actually get underwater. So I'm playing with house money. And number two, a lot of people say, well, isn't your stop, back down there? Let me show you real quick. If I went long here, with my first target up here, do I have to let the stock come all the way back down to here to prove that I'm wrong? If it got above there and got in there, as soon as it comes back down below my entry level minus a little bit more, it might be proving me that I'm wrong. Now, I try to use a closing basis when at all possible, and you see right here, people could have been shaken out right here on this dip down on the morning of, say, the 2nd of July. Stuff like that happens, but you could get back in. Probably get back in up here if you had to. But try to use a closing basis. And I say try because if you're starting to get all of these candles pulling back, pulling back, pulling back, it's tough as you watch if you got in too late. Now the fact is, we get in. Show where the entry here. Get in on the proper entry, and it comes back. As soon as it got back up here and started pulling back, you probably pulled part off the table. You can now give it all the way back to your entry point because you've got money that you've already taken off the table. If you're still in a full position, you probably don't have that luxury. And you have to decide whether you have the intestinal fortitude or it's your trading strategy to let it go up and let it pull back all the way to your stop. I'm one to do all in on the entry and do partial exits when it starts to show some weakness. And I'll take about half off the table here. And if it turns and it starts to just explode to the upside, I still have half. If it continues to go down to the downside and comes and takes my stop out, I still took off half here near the top. And that's my trading strategy. And I would have still had on the S&P, well, I still have half of the position for the SPLV. All right, for my mother. Okay. Mary Fife, can you please explain the simple and exponential differences to explain my in my fresh mind? I'll do better than that. How do we try this? Investopedia. That'll basically tell you the SMA just average. It takes all the prices and it's over 10 days. It divides by 10. The exponential moving average does the calculation where it gives greater weight to the more recent price. So they use 7 days. And you can see how it weighted the average here, 2019, 17, 16, yada, yada. Okay? All right. Let's move this out of the way. Do I use trailing stops and options? Actually, what I normally do is I'll pick up a stop and where was my latest? Let's go to a daily. All right, this is not a good one here. All right, I'm long some Costco. I have part of it in a long-term position, part of it in a short-term. And what I did here, as soon as it started to move up here, I'm doing a trailing stop, and I'm manually adjusting it once per day. You're welcome, Mary. And what I'll do is I moved it to 255, and as it went higher, I let it go a couple of days because I thought over this 259 and a quarter level that it might actually retest this low again. So I put in that trading stop approximately there. I do not remember the exact prices, but as it continued to get above this prior level, I trail it by a couple of days. Now I'm looking to see if it breaks and closes below that level. So do I have a trailing physical stop in on the stock? No. Is that a great idea? Not necessarily the best of ways to do it, especially if you're brand new, but I do abide by my trailing stops. If I get hit, and I'm here every morning at the open, so if this thing gaps down below my level and it stays there and doesn't bounce, I'm out. The good thing about options is that I have a defined risk. I know that I can't lose more than I have in the trade because I don't do naked options. So therefore, as it came in here, then I raise it up, and you notice that I'd raise it to this level and let it go a couple of days, and then it comes back. I try to stay as close to the 8 exponential moving average as possible, but don't go above it. Using that to look at where's the 8 EMA and look back to the left to see if there's any supporting price levels. I'm really using price levels, but I'm using the 8 EMA to help me find those price levels and vice versa. And you notice how this thing, and then a move up and then pull back. Now watch what happens when I take it on a 3-day. That one's not so bad. Is there a little bit of a J hook here? Yes. Could people who were looking to go long here on a 3-day? Probably over 265.75. Where would their stop be? It would be under the 261. And using options, that wouldn't be all that much. Using the stock, you can't buy a whole lot without putting a whole lot of money into it. And that could be a significant amount. You go back to a weekly, you see how it kind of paused, but you notice how the 3-day or even the 2-day shows up a little bit better than the 1-day. It's kind of hard to see what's going on here, although you're doing a gentle pullback. Where did it pull back to? It pulled back to where the buyers stepped up right here on this day, right there, the 17th. And as we got close to the 17 exponential moving average, which just happened to be where that price level, buyers stepped in again, 2 days in a row. I'm going to leave it. I would leave it at that low stop until it gets above the prior levels, and then start inching it up. And what I'm doing is for this day, I'm looking for one of these 2 days over here. For this day here, we had a big move. I don't like to give them a whole lot of room there. I'm probably going to bring it up to about halfway through this candle, a little bit below that entry candle. If I were really happy with my with the profits that I've got, I might even raise for part of it right here to midway in this candle. If the next day it comes back down, I would have been out, but it didn't. I maybe raise it to here if I'm really happy with my profits, and suddenly it comes back down through here. I'll take half off with the full stop still being probably down here below the 8 exponential. Now, do I use the vol stop as a stop, the little green dots here? No. I use them as a candidate or notional area to be looking for a stop. Now, guess where that stop is? About way 50% in the middle of that candle there. What it's saying is the average true range times 1.5 for the last 10 days. That's where the stop would be. Now, I have to decide whether I would be happy being stopped out if we do a gap down or move back down, spike, and then move back up. I have to decide. But I use these as a pretty good area until we get big, huge moves. And then you have to decide whether you're going to get very tight on that one or not. Okay, take that out. Hope that answered your question then. Steve, I know how to get the lower chart tabs, but cannot find a video on the upper chart tabs. Can you show me the menu button? Yes. Okay, we're talking about menu tabs on TC2000. All right. What you do is, let's just go ahead and add a 6-hour chart. Let's do it this way. File. Whoops. Tools. Come on. My fingers are getting messed up here. Chart. I'm having a senior moment here. Sorry about that. New chart. Now I added the chart here. Now I'm going to change that to, well, doesn't have a 6 hour. Let's just say you want to do 65 minute. And you wanted to tab that across here. Sorry. Right in here on the tag it, and then I left click on it. Sorry, let me get back out. I left click on this little cross, the move window, and do I tab here? Do I tab above? Okay, and I did tab here, and that put that chart across the top. I'm going to move that one, delete the tab. Sorry it took so long to do that. I was just having a senior moment. Okay. What platform do I use for intraday trading? Well, I will use NinjaTrader to do the chart plots, and I will use NinjaTrader to actually do my trading. But if you don't, you can actually use the free one with Thinkorswim as providing your data, and then actually use Thinkorswim to actually trade. If I'm doing a stock trade, I do directly within NinjaTrader. If I'm doing options trades, I find them, plot them on either, let me get it right here. Let's say today's watch list. Snap. I was going up here and I saw it breaking above this this $15 level. We enter it to the Analyze tab and do an entry using options if we were using that. Sorry, charts. And otherwise, the gap up here went over 16 and then pulled back. Let me show you what a 5-minute chart looked like on Friday. Okay, it's not going to do that because, all right, this is the pre-market trading. It opened and gapped up and then immediately crashed down below 16. We had people in the trading room on Friday that were long snap. As it collapsed back down here on a 5-minute chart, we got out as it broke below 16. Personally, I wasn't in on the snap trade, but that's what people were using. So, if you're looking, what I do, I have two charting services that I use, NinjaTrader and Thinkorswim. They're both set up identically. And if I'm trading stocks, I'll directly trade off the chart in either Thinkorswim or in NinjaTrader, or I will go to the trade tab and enter using the matrix here. All right. Hope that answered your question. Yes, T. Well, my sessions I record and I post them to my YouTube channel. I cannot say the same for the others. I really don't know. I'm sorry. I think they get it posted, but I'm not absolutely sure. What is an indicator of a bottoming pattern, especially ones that going sideways at the bottom? Well, that's a good question. Let's see which ones were the bottoming patterns that we saw. On a rounded bottom breakout, I I saw some actually. All right. Obviously, double bottoms work, like XPO did, or where we did this kind of moving averages. I'll use the EMA only chart. And when I see something doing like this and it really gets constrained here, like it did right there, call it the 1st of June. Now let's go on over to the daily. And there's the 1st of June. And you can see how actually from price, we went all the way down, but we're actually getting a little bit tighter. And what we're doing is we're on a closing basis with one excursion down below. We're basically in what amounts to a rising wedge. Rising wedges do tend to break out to the upside, in my experience. So therefore, every time it goes back and makes a swing low, the subsequent swing lows are always higher. So you had this one here, that one where I call that a pseudo double bottom. In fact, this is one I like better than a real true double bottom because it actually couldn't go any lower. And then right here, it's an even higher low. Now, higher lows, higher highs. So we have a high up here, higher low, higher high, higher low. We need to make a higher high here. And higher or equal. It will not negate itself until it fails to make a higher high or equal, or makes a lower low, or yeah, and that's when it would fail, when it would make a low down below this level. Okay? All right, what trading stocks? I've used Interactive Brokers for day trading stocks, Carlos. They're by far the cheapest. I use them for execution only. Their charting programs are horrible. I tend to use and trade more options than I don't. So I use Thinkorswim mostly for that because of the commissions and the ease of entering the options trades. So I'll use Thinkorswim. For futures, I'll use Ninja Broker. Bob S. Tesla, you're long. Nope, we're not going there yet, Bob. Okay, Does HRC still recommend TradeHawk? If so, does it work with Trader Vision 2020? I've not heard it mentioned in a while. You haven't heard Glenn G. Have you not heard TradeHawk mentioned or Trader Vision? Trader Vision, I think it's still alive. It's not being marketed very heavily, but TradeHawk, yes. In fact, Rick Sadler does trade with TradeHawk. I do not. I prefer to stay with what I've got. The commissions are extremely low. I like what I see. I'm an old dog. I don't want to be taught new tricks. I'm not necessarily the right one to talk to about. TradeHawk, I think we may have some training sessions coming up in the next couple of weeks. I do know, I believe, the gentleman from TradeHawk has actually been on vacation for a little bit of time, so that may have that may have been why you haven't heard anything in the near term. Okay. All right. Richard G wants to know how one does. I'll take that as a Fibonacci projection, which I just happen to have on TC2000. All right. I did it when it pulled back here in June. I adjusted it, and what you do is you go over here till you get to Fibonacci projection. You left click on it, and you have to figure out where you want to start. And I wanted to start here at this level, and I wanted to go up to the highest level that we had right there. Then I come down to here and pick the low. And I suspect that I was on a weekly chart when I did that. Yep. Let me take away. Let's do it again. Delete. All right. If I want to know Fibonacci projection, there's two ways of doing it. One is the way of cheating using quadrant lines. What I can do is go to quadrant lines, pick out the day of the low, pick out the day of the swing high, and it'll take you right at about the 50% level. Now that is the Fibonacci pullback, not the expansion. If you do, you could actually cheat and make it the other way. But I'm going to show you the actual Fibonacci projection and pick out the low day, pick out the day high, pick out the low day again, and I already have it pre-configured to which Fibonacci projections I want to use. I've always used the 100, which is a 1.0 expansion, 138.20, which is a 1.382, 1.618, which is a 61% expansion, and a dear departed friend of mine said, you may want to try this 78.6 expansion. Sometimes they get up to there and they stop. But if you can see, we got up to the 78.6 and paused. Now, was there a price level off to the left that caused it to do that? I don't know. Okay. But by doing that, it tells me that these are the Fib projections. We got the 7.8. We got a 1-to-1 expansion from this move to that move back over there. People were starting to sell because they thought that it had already made its move. Well, it did make its move, but it didn't make all of it. It went sideways and did a breakout again. So the Fibonacci could have helped you stay with the trade. Now, Richard G, do you have any, did that answer your question on how to do the Fib projection? I hope it did. No, Mary Fife. In fact, Fibonacci projections are primarily done on stocks. All right, Richard, thanks. Okay. We spent 30 minutes on questions. I appreciate all the questions. No problem whatsoever. Let's now open up for individual stocks. And we do have one that was looking at Tesla, Bob S. So Bob S, I'm long, roundabout a breakout. I love the fact that it got up here initially to 240 and then pulled back. Where did it pull back to? It pulled back to a support level. Kind of where this little clump of candles were over here. And again, support and resistance are areas. Right, so just 230 and a half roughly. My stochastics RSI says it still has room to go to the upside. Where could potential targets be? I think the first target's here around 257. All right. I'd say stay with it. Now, where would your stop be? Well, the volatility stop says 234 and a half. Is that probably a good one? If you want to give it some room, you're going to have to if you don't want to get stopped out. You may get some intraday volatility, which will go as low as that volatility stop or more. Okay. Valerie C wants to look at UPWK. Hi, Val. How's it going? New rounded bottom break route. Upwork. It's supposed to be fairly new. Yeah. Okay. When Upwork gets over this $17 level, it will rapidly rise to 19. Are you long already? You are. Good. Stay with it. I would not be surprised for it to move higher and then also pull back to and hit some resistance around 1675. I am going to put Upwork on my list. It doesn't have probably high options because it's so new. But if it gets above that 17, I say it does move rapidly to tag that area right in here where we got the gap down. It could stop at this 18 and the 50 level, so you can see how that goes. Okay. Robin W wants to look at Disney. Hi, Robin. Disney still looks okay if you're long. I would like to get in. Well, my Fibonacci's on Disney from way back in here. That's a trend line. Where's the fib? Oh, the fib was... I'm going to call the fib right here now. And I'm going to take it to 3-day. And I'm kind of estimating somewhere around those. We're at all-time highs in Disney, so you're going to have to probably wait for some sort of intraday pullback or a pullback. If you look at a 2-day, that's what you see. It gave a buy signal over 142.5. You notice I had that marked. And RWO, Right Way Options, has been long Disney from back here. In fact, some of us have been long from back over here on the gap up. I'm just putting that on autopilot and let her run. Okay. Jonathan B wants to look at AJRD. Aerojet. This one looks pretty good. Let me look at a 3-day chart. Can't beat that one with a stick. Good bop. You can't see the bop here in a 1-day. You start to see it a little bit on a 2-day, but I definitely see it on a 3-day. HARD. Looking to go long on a little J hook. This one doesn't look like lately it's been doing any pullbacks. So, more than likely, all you're going to get is some sort of pivot or flag. You're not going to get a classic J hook like that where it does about a 30 to 50% retracement. I'd say a breakout could be traded. My stochastics RSI with a little bit of a move up would actually cross upwards and show higher. Let's talk about a 3-day chart. 46.85 or so. 47 bucks. All-time highs. Yep, I like what you're seeing. We did Tesla. James Bonds wants to know about APPS, which apps he uses to go long. APPS. I have trouble with $5 stocks. I saw this one on a daily chart went up and pulled back. 3-day chart. You can see on a 3-day, it moved up and did the pennant. Moved up. Watch for this pennant. Watch for another move up. Let's go to a 1-day chart. And you see how these got consolidated? Let me do this. See how we're getting higher lows? That was telling us that we had buyers pushing it higher. Every time it tried to go lower, it had a higher and higher low each of 4 or 5 days in a row. It was looking to break out. It was only a matter of time. If you see that pattern, watch for the breakout above the high. Could it get a fake out breakout like it did a couple of times? Yes. You could maybe do a partial position, which is what I normally like to do, and wait for, I say, a confirmation to say move here above 5. Now it all depends. I don't like $5 stocks. I usually like $10 or $20 stocks. You won't get as many fake out breakouts. Okay, just personal preference. As long as there's enough really good ones, I don't need to be. You're welcome, James. All right, no more stocks. Running into after 9 o'clock, and I'm going to need my dinner. Thomas D. Short AbbVie. I put that down as a short last week. And let's go back to the 1 day. I hope you were short on the bounce. We did a roughly a 60% retracement here off the bottom. I see that we're unlikely to go back and retest the $65 level. Let's look at here. Anytime we get a move up, whoa, what happened there? Why is it so thin? All right. As we got to move, good Lord, why is it thin? Come on. All right, that should be better. All right. Move up and retracement. That's not right. Move down and retracement. If we have the move down and we get a retracement, that's around 0.6 because that's 0.75. Anytime we get a retracement up or down of 60% or more, the best I can probably hope for is a retest of the low or the high. That's normally the swing low or high gets tested. Many times it doesn't get there. It only gets about 2/3 of the way there. So watch out that this is actually a low, and my stochastic RSI is telling me it's a potential short-term low. Now, are you happy to let it go all the way back up here to $72.50 to $73 and see if it breaks that? Is that your stop above this level? I don't know. You'll have to decide. Personally, when it does that, if it does a hammer and goes above that after say 5 to 10 minutes on the following day, I'm probably bailing out. Take my profit and look and see if it fails again, I can get back in. Remember, I have extremely low commissions. The way I short these is via options. I only pay $1 in and $1 out, plus the fees of about 15 or 20 cents. So it's basically negligible. If this had only gotten up here to the 50% level, and that's what I was looking for, I didn't short AbbVie because as soon as it went above 50, I said, it's probably not going to come back down to retest 65. And that's what I was looking for. I'm looking for a higher reward to risk. I want the best place. And again, AbbVie is a short in an otherwise rising market. I'm bucking the tide. So that's why I don't like to do that. All right, Kevin, I'm long some. Your thoughts? Summit Materials. Let's look at a 3-day here on some. Some probably hit the sellers here from over here on the left. Right in this area around 19 bucks. Good balance of power. It could pull back to 18 or even 1775 and still be an extremely bullish pattern. But watch for a potential breakout. Let's see what the 60-minute chart's doing. See what the 30's doing. All right. This one's hard to tell, but we did kind of a double bottom here at 18 1/4. We did a higher low. We're coming up here for a potential higher high. We really need for this to get up. We did get an equal high, but I'd like to see a higher high so that it's continuing to rise on that trend. If it breaks that trend line, be careful. I don't say bail out, but be careful. Gwen, hello. Gwen, let's look at RP, Rest in Peace, RealPage. I like RealPage if it breaks out over 65.60. You're running into resistance here, but I think that's all-time highs. Yep. It's run up 3 or 4 days in a row. This would be a prime candidate to move up, kind of peter out a little bit, and pull back to at or near the 65, and then start to resume its move up. Maybe not as drastic as that, but I was running out of rope. So a J hook is extremely likely on this one in my mind, like that, if it gets over. So play that J hook, and if it holds 65.60, you can put your stop down below that and go long here and expect it to break out again. Looks good. Good one. Let's look at Amazon. Mr. Amazon's highs were back here at this 2032 level. My daughter works for Amazon. She was asking me what I thought about the stock, and I said it's healed itself from the October sell-off, and if I want to go to a 3-day, oh, we were at a 3-day, sorry. Let's go to a weekly. And yeah, on the weekly, it kind of looks like, I'm going to go back there, Gwen, to your RealPage. One could, I could make a case that it did a cup and handle here, or it's doing another cup. So a cup inside of a cup. Let's do RP on the daily. There we go. I can make a case for a cup and handle already in the RP. There's a weekly. There's a 3-day. Kind of hard to tell. You can really see it in the daily as well, and or in the 5-day weekly. That's why I like to play around. I use 1, 3, and 5. I don't play around with a 2 or a 4. And I jump a couple at a time. And it gives me a different view of the world. And I might see something on a 3-day that I can't see on a 1-day chart. Maybe it filters out the noise. And sometimes on the weekly. That doesn't mean I trade the weekly, but I'll be aware of it. All right. AMT waiting for it to bottom. CT. Whoop. Waiting of the problems I've got there is we may have a change of character. Now, back in April, May, it flattened out before it resumed the upward move. This one could do the same. What I'm concerned about is that made a higher low. But you're wanting to make sure it does a, sorry, high low. They did a lower high. And you're wanting to do this. I'm seeing a wedge. I don't like wedges. They can go either way. I would wait for the break above this 210 level. This maybe the trend line or maybe the price level. 211.75-ish. They don't give me more confidence that we're actually going up. I still see it having anywhere between 2 and 4 days, maybe even 5 days of pullback or sideways move, based on my experience with the stochastics. RSI. When I say stochastics, I mean stochastics RSI. You see right here what it did the prior ones. One, it pulled back, and one, it just went sideways. So there's no one overall. ARNC. Nice. Let's look at the 3-day. Looking good. Look at the weekly. Weekly would say you're a little overbought. The daily, you got good bounce, power, good volume. The only thing that's any negative at all is it only moves 42 cents a day. It isn't a solid uptrend though. I can see what you're looking at. I'd want it to probably break above 26.28, or you could go long with your stop underneath probably the low of Thursday. I can see that. Steve E. wants to look at CMCSA. At one time, Rick would not look at anything except any 5-letter stocks. I think he used to have trouble with dyslexia on those. And so he stayed away from them. Notice where it paused on Wednesday and Thursday of last week. Right at the prior highs. Swing high, swing high, swing high. Seller, seller. Oops, broke through. This could have a short covering rally. I like it. And looks like it's at all-time highs as well. Nice. Nice, nice, nice. TH wants to look at Oracle long. I traded Oracle a week or so ago. Yep, I traded Oracle from this 57.35 and up, and then I bailed. Let's see, one, I might have singled. Yep, that's the 1 day. I'd love for it to go sideways a couple more days or even pull back a little bit, because it could easily pull back to $59 and still be very bullish. You can see on the 3-day, it hasn't even looked back, got good balance of power. And on the weekly, the balance of power is fairly strong. Yeah, we sideways and watch where these wicks are at the lows. They're going to tell you where the buyers are stepping up. If we keep hitting this 59.25 level or something like that, and we keep bouncing off of it, that means some big player out there is saying, I'm not going to let it go below 59.25 because if it gets down there, I'm going to buy it. Okay. Yeah, be careful. Richard Funk wants to look at, let's make sure I want to say today, Marvell. Marvell's one of my uber long favorites. 2450 or so is a key area for it to get over. It could easily pull back to 2450 and still be in a very, very bullish condition. Let's look at a 3. Yep. You can see the cup and handle there on a 3-day and on a 5-day on the weekly chart. Yeah, I see what you're seeing there in Marvell. They had a big dip in the August to December of last year. Like it. And Vimal Sharma, SMAR. SMAR. I traded this one long from about 48 up to 52 or so, and then I bailed. I didn't get a sell signal, but this one right here is solid balance of power. 3-day, no looking back. Weekly, of course, no looking back. We got a bullish engulf on Friday. Volume's good. Average shoe range is 3% a day. Yeah, we could easily pull back to the $52 level and be still in a very bullish condition. That's a $2 stop. So maybe you have to drill down into an intraday to find a stop, but this little spike down to 52 and a half, that's something to bear in mind. Looks like we're going to try to pull back for you. First pullback maybe around the 54, and I'm looking at maybe 53.65 or so. See what happens and see if it does a J-hook on a 60 or 30 minute chart. But SMAR, you got to find a way on board that one. It does look like. Nice find. Mr. Gupta wants to look at Caterpillar. Okay, Caterpillar single day. Up, pullback, up. Pull right at about the 50% level. It looks like it probably wants to break out. A retest of this high volume high is definitely in the cards. Level right there. 139 and a quarter. This one has been up so much, and we got a lot of buying probably into the close on Friday. Yep, right there. That buying into the close, I'd be careful. I'd want some sort of pullback intraday to get on board that one. You may want to let it break to 139 and a quarter. See what it does when it gets there. Hard to get on board those. That was a 1-day. If it did a pullback to 136 and a quarter, would I be unhappy? No. It'd still be bullish if it pulled back to 137 to 136 and a half. Somewhere in there. But hard to tell. It's really tough to get on board those. Rodrigo wants to look at Soli. It's very new, only since February actually. Medical devices. I've never heard of this one. This one's approaching the prior levels of 22. Good balance of power. That's really kind of tough. You'll have over 200 periods on the 2 and 4 hours. One of the problems I've got with these, you see the wicks here? I'm going to guess that this thing is fairly spready. That you probably got a nickel to 10 or 15 cents difference between the bid and the ask. Those are pretty tough. Because almost immediately you're trading underwater. You're given the opposite side a head start. This hourly. It does look like it wants to go back up to $26 though. This level here is untested. Just trying to find a way on board. Kind of tough for me. Almost 11.5% average to range per day. That's another not for the faint of heart. Do I see move up the Centauri? Well, I was telling people back here to watch out for the Eiffel Tower effect pattern. That's an Eiffel Tower. It'll come back to there. From there, what do you want it to do? Will it come back up here to this again? I have no idea. Now, let's go to the EMAs. What has this been telling us? We're in a downtrend, solid from January to June. We went back up a little bit in June to July. It looks like it's trying to roll over again. When we broke on Friday, we broke 44.50. That was not good. I see downness to 41 or even 38.90, $40, $39, I mean. That's what I see. Your first hope is there, and this is hope. Your next hope is around 34 something. This would look like a good short to me. However, it moves 5% per day. That's good if you're on the right side and bad if you're on the wrong side of the trade. All right, let's see here. Amazon Prime Days 15th to 16th of the month. Yep. And you're welcome, Rodrigo. IDE. You want to look at CRM. This is the last one for tonight. CRM, let's look at a weekly. Man. Well, let's look at higher than that. CRM cannot get started. All right. 167. That's the trading range for CRM with a notional on a closing basis 149, 148 something. That's pretty wide. That is a weekly. And if I go to a 3-day, you can see it again. We're in this trading range. We're bouncing around. There's the daily. I would let it break somehow out of that range and give me a buy pattern with a stop that I can accept. Gives me a good reward to risk ratio. Right now, CRM is one of those wait and see to me. Now, BMW, somebody asked about that. BMW has been one of my all-time favorites, and suddenly back here in May, it kind of fell out of bed. And I'm kind of waiting for it to get out of its... It dropped out of the trading box a little bit. What I need for this one to be interested in is I need a break above that level, probably to this level, pull back, hold the top of the box, and then move higher. All right, Gwen, everybody, thank you very much for joining us tonight. Remember, we have the recording is going to be posted a little bit later tonight. That is my YouTube page. Feel free to sign up Subscribed also to Rick and to Right Way Options, Rick Sadler. And that's where we are right there, Rick Sadler or Right Way Options. And do not forget that we have $60-day trial offers for $49 for 60 days, not 30 is listed there, for 60 days for 49 bucks. It's $25 a month. All right, you guys, take care. Good luck. Be safe. Aloha.